What happens when you combine high-yield dividend ETFs with Robinhood Gold margin? I put my small account to the test, and I have 2 weeks of dividends and price swings to see if weekly payouts really add up for my 3 high-yield ETFs. I'm showing you the risks and the real results of this passive income strategy. Let's dive in. Nothing I say in this video is financial, investing, or any other type of advice. This is for entertainment only. My account balance, including margin, is $2,275, and my margin is in good shape. I'm in the low risk category, over 11% above my maintenance threshold, which is about $266, and I currently have $17.97 of buying power available. We go into the margin screen. Certainly nice to see everything in the green. When I'm less than 5% above the margin threshold, everything turns red, and I'm in the high risk category, and I've been there a couple of times. We can scroll down and take a look at the positions and the maintenance ratios. All of them are still at 25% except for NVII at 35%. The maintenance thresholds don't really apply to me because this is a small account, and the real barrier I face is the $2,000 minimum threshold. However, these maintenance ratios are critical if you have a larger account, as they dictate the amount of margin available to you. 25% is the minimum, and the amounts for individual stocks or ETFs vary from broker to broker. This is just what Robinhood thinks. And the lower the percentage, keeping in mind that 25% is the floor, is an indication of how risky the brokerage views that security. Let's take a look at SpaceX as an example. It's extremely volatile, and because of that, if we scroll down and take a look at Robinhood's margin requirements, we can see that it has between 100 and 200% ratio, and that means I could buy a lot less SpaceX on margin than I could SPYI or CHPY. And they can change this maintenance ratio at any time, which could put you in a bind. For example, if they raise NVII from 35% to 100%, you might run into margin trouble, depending on how much of a buffer you had. Here's a look at everything in the small account, sorted by market value, with PAAA at the top, valued at over $2,400. PAAA is my anchor, and it's what I'm relying on to keep above the margin threshold of $2,000. SPYI is my forever fund, paying a hefty 12% annualized yield. And below that are my 3 ultra-high yield ETFs, CHPY, NVII, and BLOX. All 3 of these are weekly payers, and I'll get into the dividends shortly. But you'll notice my individual account value at $2,275 is less than PAAA's value by itself. And that's because the value of the assets in my ultra-high yield ETFs has gone down from the amount that I borrowed on margin. So that deficit is counted against my assets. At the bottom of the screen, you see a couple of cryptocurrency positions. These are all very tiny and don't really factor into this experiment, other than these rewards got dumped into this same account. Now, let's take a look at share price return. This is a percentage change, not showing actual prices. And this chart represents 2 trading weeks starting on June 29th, ending on July 10th. QQQ is here for reference. It was pretty much flat over that 2-week period. BLOX was down over 8%. NVII was up about 7%, and CHPY was down over 6%. I updated the chart to include SPYI over the same 2-week time period, and it was up over 1.8%. And this is the fund that I'm building towards having as a long-term holding. Let's zoom out and take a look at the 1-month return for all of these. The first thing I notice is there's a lot of volatility, but in the end, everything stayed within about plus or minus 5%. BLOX has been having a rough time. It's the worst at down 5%. And of the funds I'm invested in, CHPY has done the best over this 1-month period, up over 4.5%. Now we'll turn our attention to dividends. Starting with NVII, I received 2 over the last 2 weeks, 21 cents per share and about 18.5 cents per share, a grand total of $3. As I receive a dividend, I split it in half. 50% is reinvested back into the security that produced the dividend. The other 50% is invested into SPYI. And I was able to do that for all of these dividends except for this 71 cents to be reinvested back into NVII. I need at least $1 to make a purchase, so I'll save that and combine it with the next week's dividend. And these 2 dividends are in the 40 to 45% annualized yield range. Moving over to BLOX, I received about an 11.5 cent dividend and an almost 11 cent dividend, for a grand total of $2.08. Like with NVII, the dividends are split in half and reinvested, with this 51 cents awaiting reinvestment. Scrolling over to CHPY, I received almost 67 cents, then almost 63 cents, for a grand total of $3.86. This 93 cents was just short of the amount I needed to reinvest this week. I also received one more dividend from PAAA. This is a monthly payer, 20 cents per share, for a total of $9.59. This dividend is not split in half. I let PAAA feed itself, and this helps increase my buffer because I have had some near margin calls and have had to add additional shares of PAAA to increase that buffer. So I've mentioned the 3 ultra high yield ETFs that I'm using to try and turn $1,000 of Robinhood's margin money into $1,000 of my money. So I want to talk briefly about each of those 3 funds. The first is NVII from Rex. It's currently at about a 41% distribution rate. This ETF is designed for investors who want exposure to NVIDIA while also generating weekly income. This fund combines leveraged exposure, typically between 1.05 and 1.5 times NVIDIA's daily price movement, with a covered call strategy on part of its position. That approach aims to provide income while still participating in some of NVIDIA's upside. The fund has been around since May of 2025 and currently has about $106 million in assets under management. We can scroll down and take a look at its dividend distribution history. And once we get to the payouts, we'll see they're generally in the same range. Here's a low recently of about 18.5 cents. We had a really high one a couple of weeks back at almost 60 cents, but it's generally in the high teens to the low 20s range. CHPY is a very popular fund from YieldMax. It is also currently about a 41% annualized distribution rate, and it's designed for investors who want income and exposure to the semiconductor sector. It actively invests in a portfolio of about 15 to 30 semiconductor companies and uses option strategies, primarily selling call options, to generate income. And it aims to pay distributions on a weekly basis while still participating in some of the sector's potential upside. This fund has been around since April of 2025 and has over $1.1 billion in assets under management right now, making it a tremendously successful fund for YieldMax. Let's scroll down, take a look at the distributions. The distributions have recently been in the 60 to 70 cent per share range. If we scroll a little further back, we see it dips down into the 50s, the 40s, even the 30s. But these are definitely pretty high distributions. If we take a look at the holdings, you'll see that it has a who's who of hot semiconductor names. And if you're interested, I recently did a video breaking down each of these holdings, ranking them from very bearish all the way up to very bullish. So check out that video if you're really interested in CHPY. My third ultra high yield ETF is BLOX, the Nicholas Crypto Income ETF. It's designed for investors seeking both long-term growth and current income through exposure to the crypto ecosystem. The fund invests in U.S.-listed ETFs, crypto-related companies, and blockchain businesses, then uses option strategies on portions of the portfolio to generate income while aiming to capture upside potential. Taking a look at some of the details, we can see it was started in June of 2025, has about $300 million in assets under management, and the distribution rate is 36%. It doesn't fluctuate week to week. They're trying to hit that 36% each and every week, which could be both good and bad. Good in that you can anticipate what the distribution is going to look like, but bad if they have to pay out more than they should in any particular week, which could hurt the price. You can scroll down, take a look at the distributions. See, generally it's in the 9, 10, 11, 12% range. If we take a look at the holdings, we'll see a variety of businesses. So there is some built-in diversification within the cryptocurrency sphere. The fund doesn't invest directly in Bitcoin or Ethereum, but it does have holdings that do. For example, the VanEck Bitcoin ETF, HODL. Now for a look at how everything fits together. My 3 ultra high yield ETFs are down a combined 43.5%. CHPY had been in the green recently, but it slumped, and BLOX had a bad couple of weeks. But the SPYI position is up around $250, 25% of the way to my goal of $1,000. Once the SPYI position is built up to $1,000, I'll start using the dividends from the ultra high yield ETFs to pay down the margin balance, hopefully eventually reducing it to zero, leaving me with $1,000 worth of SPYI and no margin balance, which would mean that I turn $1,000 of Robinhood's money into $1,000 of my money. Because remember, I get the $1,000 margin loan interest-free as a Robinhood Gold subscriber. I do pay a little over $4 a month for that subscription, but I'm doing it anyway. So as a perk, that's a free $1,000 margin loan. When you combine the 3 ultra high yield ETFs with SPYI, the portfolio as a whole in this experiment is down about 18.5%. I'm not including PAAA in this calculation. And if you'd like to learn about my small account margin strategy, check out the first 5 videos in the series. And there's tons of update videos, almost one per week. There are videos about my margin trouble, how I solved them, as well as my thought process as I moved in and out of different ultra high yield ETFs to land where I am now. I'd really appreciate it if you like and subscribe if you found this entertaining or helpful in any way, and that helps the YouTube algorithm know that people like the video. And remember, nothing I said here today is financial, investing, or any other kind of advice. I'm just inviting you along my journey. Good luck hunting those infinite dividends. Take care.